Okay, so we're all set on that. So it's recording, that's recording right now. And then we're gonna start this, because I always just tell people that this thing starts, at the 2-minute mark or whatever it is.
Okay.
All right. So I'm used to mine, this is just a little different than mine, but it's close enough. You guys ready?
Yes.
Yep.
All right. Welcome, you're listening to The Best of Investing. I'm your host, Edward Brown. I'm proud to have as my co-host Mark Hanf of Pacific Private Money, one of California's fastest growing mortgage investment firms. And for those of you new to our show, imagine a few guys sitting around a bar having drinks without the drinks, talking business with you, the audience listening in. Our phone number is 888-912-1190. You're going to use that number to answer the trivia questions for 3 tanning certificates given away during this show. And those certificates are not sponsored by the radio station, but by Tan Bella Tanning Salon with 2 locations in San Francisco and 1 in Marin. And today's trivia theme
is trivial.
Yeah, and that's true. That's what trivia means. General legal concepts, all right? Our website is bestofinvesting.com. Check us out on television, Comcast Channel 26 and AT&T Channel 99, Saturdays at noon and Sundays at 3:30 p.m. Now, today's special guest is Michael Snearly to answer questions about cyber insurance. Michael, welcome to The Best of Investing.
Thanks for having me, Edward.
So one might wonder, why would we be talking about cyber insurance or cyber liability insurance on a Best of Investing show? And the reason for that is if you're an individual or you're particularly a business owner and you haven't heard of cyber liability, well, it's a really big deal nowadays, isn't it, Michael?
Yeah, definitely. Of all the commercial coverages that we're writing, we are seeing the largest market share growth in cyber coverage, just because you're seeing a lot more claims and you're seeing a lot more people become educated about some of the risks involved with cyber liability.
So what exactly is cyber liability, and how does cyber liability insurance work?
So cyber liability is actually not the best name for it. Cyber makes you think of maybe 90s computers and things like that. So
Cyborg.
Yeah, so it even sounds a little bit outdated. Really what it's about is network security and data privacy. So all companies are legally obligated to maintain the privacy of client data, so personally identifiable information with respect to their clients, personal health information, so there's a lot of HIPAA compliance. So cyber responds in cases in which data that was meant to be private has been compromised, and it responds to cover some of the fees and charges that a company might incur because of that breach.
So what are the most cyber liability claims that we have today?
Well, I mean, in the news, Yahoo has had a pretty massive breach of over 1 billion names, of 1 billion users having their box just had a really big one. And so then there was the Target breach from a couple years ago, which was massive.
So those are big ones that make the paper, but like for a smaller business, like for example, my company, Pacific Private Money, we're mortgage brokers, and there's thousands of mortgage brokers in California, and we handle people's tax returns, and we usually save that information. We get emails with attachments. We save that information to our servers. So we're handling social security numbers, credit scores, that type of stuff. What type of cyber liability issues do companies like mine need to concern ourselves with?
I would say the 2 main things that you would need to keep in mind. First would be a malicious attack, maybe by a hacker or someone from the outside who breaks into your network and now has access to different files that you wanted to keep private. So that's
how would they know that it's being breached?
You typically don't know until after the fact, unless you have a really on-the-ball IT department. There are some hospitals that have such high levels of security that if they even assume that there's a breach, they will shut a computer down and kind of alert the IT folks to respond immediately to what may have been a breach from one computer. So unfortunately, it's often not discovered until after the fact, until they're, say with Target, enough customers call in and say, why is my credit being checked? Or, why are my credit numbers going down, and why are these charges? And then they can trace it back to the single source.
Yeah, I was going to say, because in general, these people are having issues, and may not even they didn't know what happened with Target until like enough people happened to get it traced, right?
Yeah.
Yeah.
So that's that's actually one aspect of the coverage is the detection. So one of the ways that cyber coverage has evolved is that they have brought in some of these the ability to detect potential breaches. So if you think you may have been breached, cyber liability can respond with some coverage before a breach, because they'll come in and because they want to mitigate loss, and if they think there could potentially be a breach, they want to know it as soon as possible. So even before there's a quote unquote loss, which is a very key insurance term, cyber liability is unique in that you can get coverage to respond before even a quote unquote loss, because of the desire to detect these breaches.
So can companies get cyber liability coverage by itself? And the reason I ask that is because I know that we have cyber liability coverage, but it's attached to my errors and omissions, my brokerage errors and omissions policy. It's kind of added onto it, but that's a really expensive policy. And I know that not all mortgage brokers, for example, carry what's called E&O insurance, but so can you get it by itself?
Yes, you can. You can get it monoline, but with certain industries, they want it connected. They won't write one without the other. So for you, because you have so much personally identifiable information and such valuable personally identifiable information, they're going to want to connect an errors and omissions policy with a cyber policy. You also see this with companies who write software, who develop websites, because an error and omission in their part could lead to a breach. And so the errors and omissions coverage and the cyber liability coverage are so closely connected that they want to write them together. But certainly, anybody can get cyber, because really everybody has a data privacy exposure.
They do. Well, if you're selling anything and you're collecting credit card information, now would that typically be a standalone cyber coverage that the company would get?
For the retail, yeah, because they don't necessarily have the professional exposure that you would have. But they certainly have the exposure for the data privacy.
And that's the first question I asked the lemonade stand with the kids. I said, let me see your cyber liability insurance, because before I pay cash, I want to find that out.
Right.
Okay, hey guys, we're going to cut to our first commercial break here. Before we do, we have a quick mention. Hey, guess what? At New George's in San Rafael, you can go for New Year's Eve. They're having a special free champagne toast for patrons. Now, it costs $30 at the door. $30 in advance, $35 at the door. You go to Brown Paper Tickets, type in reggae, NYE, and they're going to have all kinds of things. Like Rasta Inity Tour, not even sure what that is. Higher Logic, Hotbox Records, Chris Ward, MCIN Peters. And that's going to be December 31st at New George's, and it starts at 9 p.m. and goes all the way to 3 a.m. You do have to be 21 years or older, so check that out at New George's in San Rafael. Okay, here is our first commercial break. Again, we're talking general legal concepts, and Michael, if you know the answer, don't say it yet. We'll let you answer and come back. Which founding father defended the English soldiers who were indicted for the Boston Massacre? And we're going to give to the first three callers those tanning certificates. Call 888-912-1190 to answer this question. Which founding father defended the English soldiers who were indicted for the Boston Massacre? Don't touch that dial. The Best of Investing is going to be right back. All right.
It goes
That's our
fast.
first
It
one.
goes fast.
Wow.
Okay. So let me...
So what I didn't get a chance to ask you, and
I want to find out how much it costs. That's one of the questions.
well, you're right, and so maybe with the lead in, so we're talking cyber liability coverage with Michael Snearly.
Yeah.
If I'm a consumer, should I be asking companies that I'm giving my private information to? Maybe not that I'm buying stuff on the internet, but if I'm working with a mortgage broker, should I be asking them, hey, do you guys have cyber liability coverage? Is that something that people it ought to be on their radar?
For a single consumer, I would say that might be, a belt and suspenders approach.
Yeah,
But
because some people are getting pretty.
Yeah, I mean,
they won't email stuff.
Exactly. Well, I mean, and I would say certainly depending on their net worth, that may change the conversation. But I do know for a fact, we see it all the time. Especially larger tech companies are requiring it of smaller tech vendors because see, the way it worked on the Target breach was it wasn't Target's fault.
Right.
It was the HVAC company's fault. that was installing air conditioners on, and so those air conditioners have an internet connection that they send to the home office saying, hey, replace the filter, hey,
That's unbelievable.
we need maintenance. And so through that internet connection, now they're able to get into that store system,
I'm
which
going to
has,
ask you to tell that story.
Yeah, that's a good story.
That's just too cool.
and so you
I
have
also
large
save this in my documents.
you have
so we
large
can
companies
Okay.
that are requiring it from the smaller vendors now, for sure, even some pretty high limits, because they know that there's a related breach exposure. And in that case, certainly Target can subrogate against the HVAC company if they have enough limits,
Yeah.
and until they're bankrupt.
You know what? That ought to be illegal. Okay. Gotta make one quick mention.
Subrogating sounds like a dirty word.
Is a dirty insurance word.
Yeah, really.
And then one other thing was, we really only talked about the malicious side, but I think one thing as far as buying and selling cyber insurance that people forget is that almost 1/3 of all cyber claims come from innocent mistakes. So for you may have a worker who is sending you an email with a list of all your clients, and they're typing in Mark, and it auto-populates Mark, another one of your clients. And then they send another one of your clients all the information.
Gotcha.
And technically that is a full-on breach that requires a full-on response
Wow.
it would be as bad as if a hacker came in and took it.
Yeah.
So whether a hacker takes it or an employee makes a mistake, an employee leaving a notebook that has information at a coffee shop and losing it is considered a breach. An employee who loses a laptop computer and doesn't know where it is considered
So
a breach.
examples of breaches, okay.
Yeah.
So just that it's not just the malicious side, because you may think, well, I'm a mortgage broker, or I'm small, who's going to target me? Well, that might be the case, but it's
No,
also
but especially with all the important information, tax returns and all
So
that
we're going to
stuff.
try to, we should definitely get your contact information out. We're going to try to get as much as we can in the next segment, which is 9 minutes. We'll probably maybe do a little bit in the third segment, but then we'll go into email time, and I'll probably talk a little bit about mortgage pool funds and deal of the week.
Yeah, and your question is, it appears that interest rates may go up with the new administration. How will that affect your fund?
It's not Trump's fault, damn it.
It's all Bush's fault.
It's Taft's fault.
I always vote for Taft. Okay, you guys ready? Good segment. Okay. Now I'm gonna make one little mention here too about something. Okay, you ready? Here we go. Well, welcome back to the Best of Investing. I'm Edward Brown, your host, along with Mark Hunt. Here was our first trivia question. Which founding father defended the English soldiers who were indicted for the Boston Massacre? Anyone know that?
I wrote down John Adams.
That is correct. You
Good
knew he
guess.
was an attorney, and then he went back to normalcy, being a farmer. And before we go back to our guest for just a minute, I do want to make a quick mention here for whether you're a local or entertaining visitors. Check out the new Cityscape Viewing Lounge at the Hilton San Francisco Union Square for 360-degree views that are out of this world. I've been there. The food is fantastic, and you really do get 360 degrees. That's at the Hilton, San Francisco Union Square, and especially go around Christmas time, it's going to be awesome. Mark, you want to reintroduce our guest?
Yes, we're talking with Michael Snearly of Pro Insurance, based in Novato, right here in Marin County, Bay Area. And we're talking cyber liability and cyber insurance. And off the air, Michael, you were saying telling us some interesting stories about examples of breaches that I found pretty interesting. Could you just go over those quickly once again? Because I think our business owners might not realize just how exposed we are when we're handling confidential information.
Sure, yeah. I mean, there was the Target breach that occurred a couple of years ago, big headline news item. But I think what people don't really understand about that is that it wasn't primarily Target's fault. Of course, they made the headlines, they're the big name, so they are the ones who had the massive reputation loss because of it. But really the breach occurred because people were able to hack into the internet connectivity of the heaters installed by an HVAC vendor who installed these heaters to communicate with them.
That is just unbelievable. So
It's not very nice either.
So the hack came through the HVA system, not directly through their computers or through one of their employees.
Right, it came through the HVA system, then it got into Target, and then it spread. And the other thing about Target, and this is sort of true now with most claims, is they don't expose themselves right away. They don't come in and say, hey, we're in your system, you owe us money, pay us, and we want this or that. They go in and they sit in there for as long as they can undetected. Because then like Edward's question about being detected, they're not detected. No one knows. No one has been paying attention, and it can be very valuable for them to mine this information over months and months and months and years even sometimes before it gets detected, as opposed to just going in and kind of making a quick grab and saying, pay us all this money right away. And so that's what they did. So
when you say pay all this money, you talk about the hackers going
Ransomware?
yeah, like cyber extortion. Yeah, that can happen sometimes, and it certainly happens to smaller businesses. That they tend to target small businesses, where they'll come in, they'll hack into the network, they'll say, we're in here, we have all of your data, and we're keeping it until you pay us $10,000. Or we're going to shut down your entire system. You're not going to be able to use your website. No one's going to be able to order from your website. You're going to make 0 sales on your website until you pay us
get chills.
$50,000, right? And then so it becomes a cyber extortion event, which is also a cyber exposure.
You had mentioned also an example of someone sending an email out, like an innocent email, maybe an inner office email.
That's correct. Yeah.
The first hint is don't hit reply all.
Yeah.
Or be careful who's on there. Go ahead.
Absolutely. Yeah. So yeah, 1/3. I think people don't realize that 1/3 of all cyber claims are innocent, related to an employee's honest mistake, where maybe they are typing into the to box and it auto-populates a name they didn't want. They may think they're sending it to you, Mark. They
That
type
happens to me
I
all the time.
I
I think I'm
too.
sending it to Edward, and it's going to another Edward. It's like,
Yeah,
oops.
exactly.
And sometimes it's very embarrassing.
in. Yeah, and if you've already attached very sensitive documents, that is considered a cyber breach, and the law expects you to respond as if, making sure you're taking all precautions necessary to cover yourself.
I mean,
And that
what do you do once it's out there? Do you just have to send an email that says, "Oh, please disregard it was meant for somebody else"? I mean, that only helps so much.
Sure, you can mitigate and try to make sure and by various means that maybe they don't open or they don't see it or get their word or get them to sign something. But the truth is, you need to walk through the protocol of a breach, and that is all outlined by the federal government,
Wow.
by the state government, and it's not cheap. Because it requires written notification, it requires you setting up a call center for people to monitor their credit, and
That's wild.
And how much does this insurance cost?
Yeah, speaking of costly responses.
Yeah. So the premium, entry-level premium on this is going to be around $2,500 a year, and for the $2,500 a year, you're getting $1 million worth of coverage, and that $1 million covers things like the call center, like the notification costs, like the lawyers that you might have to hire if you were sued because of the breach. And then it goes up from there.
That actually surprises me. It's funny. I'm very cost conscious on stuff, but that actually doesn't sound like it's that expensive, relatively speaking.
There's not a lot of examples of what I would call cheap insurance, but that is cheap insurance.
Yeah, relatively speaking.
Relatively speaking.
I know you have to be. I know it's all based on claims and all this kind of stuff, and who knows, maybe over time, unfortunately, maybe it'll go up. But because when you hear of the breaches that happen, it's really large, like Target or whatever.
Absolutely, yeah. So what they look at, what drives the cyber liability premium, first of all, they do want to make sure you have some good practices in place with your network.
Okay.
So that can bring your premium down, but then they also want to see your exposure. So if you've got if you're a mortgage broker with a massive amount of revenue, that's good. You have obviously increased exposure.
We all wish.
Yeah. So the more you grow, the more you pay.
Yeah.
Well,
So how do people get in touch with you if they want to know more information about cyber insurance? Also, you're a commercial lines specialist, so it's not just cyber liability, but it's workers' comp, it's
general liability, it's the professional liability, commercial auto, umbrella, all that stuff. We have access to
all the things that if you're a small business owner, you absolutely, if you don't already have, and certainly if you have, you might be worth your while to check out a competitive quote.
Yeah,
absolutely.
You're the first one who actually I've talked to who actually does have the cyber liability insurance. Because I know a lot of people who do workers' comp and all that, but that topic hasn't come up.
Yeah.
So go ahead.
How do people get a hold of you?
Yeah, feel free to call me on my office line, which is 415-223-5549, or you can email me at michael.snearly@proinsurance.com, and so that's michael.snearly@proinsurance.com.
Can they find you on your website, proinsurance.com?
Yeah, if it goes through the website, it can get filtered through and definitely make its way to me there.
Just be careful of the personal information you put on. Oh no, wait, you already
Yeah,
handled the
we're
cyber.
covered.
I'm sure
We're
you're covered. Yeah.
Yeah, we have a policy, I'm sure. So yeah, feel free to get in touch. I'm happy to discuss not only this coverage, but any other coverage that might be on your mind.
Have you had any interesting claims yet, Michael?
You know, it's interesting. Yes, the answer is yes. And I think there's a claim that I've been exposed to or heard about in which it picks up a lot of the different things that we talked about. A hacker or a group of hackers made their way into a network. They did not reveal themselves for quite some time. Their sole purpose for getting into the network was to observe the way emails got written and sent. That they were there to observe the way the boss asked for money.
Wow. So it wasn't necessarily directly malicious.
It's not direct. They're just observing. They're observing. They're observing, and they're waiting for the proper time. And what they're also observing is maybe travel plans, and
When people are away.
exactly. So what this claim, these hackers were able to determine that the owner wanted to buy art for a remodel project that he was doing, that he was going to Australia for the purpose to buy art, and they knew when his plane left.
So that's,
So they hack, they're in there, so they know the plane leaves LAX at 10 o'clock in the morning.
Yeah.
At 10:05, they send an email that says, hey, my plane's about to leave, but I just saw some art I want to buy, wire $150,000 to this account, and he signs it the same way the boss signs it, like, with a lowercase j, he doesn't say thanks, right? It looks exactly as if it's coming from the boss. And they wire the $150,000. They actually made a second request. He said, I just found another great piece. Now send $350,000. And it was at the third request when the bank account was almost empty. They said, if we send this, it's going to empty out the bank account. And so we can't do it. And then they went and checked the CFO and then got a hold of him and found out he was like, I never sent any of those requests.
Can you imagine your stomach dropping on that one? Oh.
we got to go to our next
Okay,
break.
we got to go, especially after that question. Oh. At that point. Okay, here's our second trivia question here. What is the Latin term for buyer beware? All right, the first three callers with the correct answer is going to win a free Tan Bella certificate, good for 3 tanning services. Call 888-912-1190 to answer that question. What is the Latin term for buyer beware? Don't touch that dial because when we come back, we've got some very interesting things to talk about with Mark Hoff about the fund and a deal of the week and a special email question about interest rates going up. Don't touch that dial. We'll be right back. All right.
Okay.
Okay.
That's an incredible. It's really a question of. It's just going to be at what point does every person get hacked?
Oh
Yeah.
yeah. Well, I've been the
People
victim identity
beyond
theft.
I mean, that's what 1/6.
We've been
of the world
really lucky
population.
so far, but I sleep better at night having that coverage, although still when it happens, it's going to be, I'm sure it'll be totally disruptive.
Yeah, it's just like you're saying, the value. I think people do underestimate. This is, if we talk about the social good of insurance, we can talk about it, but underestimate the value of an insurance policy because it responds on your behalf, so it avoids a lot of the disruption. Like if you get sued and you have an insurance policy that would cover that claim, then the insurance company takes care of the defense. They take care of everything, and you're not having to go to court. You're not having to do all these things. It will interrupt you, or obviously will create a disruption at some level. But the difference between the disruption you would have had is 1,000 times less.
I've heard of hackers being able to measure or analyze data based on the fan speed of a machine.
Interesting.
Wow.
Which is crazy. So it's not even connected. It's listening to the fan speed and how it changes.
Yeah.
That's it.
Well, actually, and don't necessarily want to talk about this on the air, but our company had a hack where and it wasn't that somebody hacked us. What they did was they somehow noticed our CEO writing emails a certain way. And so then they created an email address. So his is david.hopeful@proinsurance.com. They created an email address, david.hopeful@prosinsurance. So it's just one letter. So when somebody's just quick scanning, it looks like it comes from him. They had kind of measured the way he wrote, and then they would they were writing to like our treasury people, admins
That's
saying,
just nuts.
send 50 grand, we need to buy some office furniture, send it to this account, and we'll. But thankfully, we're astute enough when they saw the request. I mean,
What's the first thing you're going to ask me on that? I'm sorry, didn't mean to.
The email question?
Yeah.
About the
No,
interest
what's the first? When we go in on this segment, what's the first thing you're gonna ask me? We're gonna start with after the.
what do you want me to start with?
Um,
Deal of the week or?
Yeah.
Okay. Oh. Scary.
that's nuts.
Okay, I'm still waiting for my Nigerian lottery to come through.
Yeah. It's getting a little more sophisticated.
Yeah. Oh, these people are so I
They
can't.
keep writing different stories. I get several a day.
So do I, but I laugh at how they write these things. Like, you know what? If you're going to do it, at least hire somebody who knows the English language really well. You know. So feel free to ask more questions. You know, if you have when you're hearing him talk about stuff. Okay.
Okay. Yeah, we'll probably we've got 3 more segments. Another couple of 8, 8 and 9 or. Couple of 9-minute segments, and then we got 5 minutes on the way back. We'll do a wrap up and give your contact information again, and do a couple of closing comments on cyber liability and et cetera.
Great. Okay, you guys ready?
Yeah.
Here we go. Welcome back to the Best of Investing. Again, I'm Edward Brown, your host, along with Mark Hahn. Here was our second trivia question. What is the Latin term for buyer beware? Anybody?
Michael, no?
Caveat emptor.
That's right. I learned
Yes.
that's on the Brady Bunch episode. Okay.
You're not well.
Well, I'm sorry. Listen, I get most of my education from television, unfortunately.
I got all mine from SpongeBob.
Wait a minute. You were older than that?
That's true. Family Guy.
You're
South
older
Park.
than that, too. I'm supposed to say I love Lucy. Okay. So, Mark, I'm going to just come right in and ask you deal of the week. So you have to give a little bit of background.
Right, so in case you're a new listener, my name is Mark Hoff. I'm president and broker of Pacific Private Money. We are a regional marketplace lender. That's the fancy new name for hard money lender, private money lender. That's
All right.
if you go to any fintech conferences now, they talk about marketplace lenders. So we're a regional marketplace lender. We do short-term loans to people who can't get bank financing for whatever reason, and typically it's speed. It's not that they can't get bank financing, it's that they need a loan to close quickly, sometimes within a week or 2 weeks, and most banks nowadays, thanks to all the Dodd-Frank regulations, can't respond that quickly. So we're in the business of fast, reliable financing. We're kind of the plan B when plan A, which is conventional financing, is not an option. And so here's an example that we're working on this week that is not too atypical. So this is a guy that had a lease option to buy a place that he's been renting for several years. Now, a lot of people got into lease options at or near the bottom of the market. And that's what this gentleman did. 2012, he entered into a lease option to buy this home for $570,000. And he is now at a point where he is ready to exercise his option. And the appraisal came in for that property at $900,000.
Wow.
And so this is a situation where now at Pacific Private Money, like most alternative lenders, we generally don't do 100% acquisition financing. We don't even typically do 80%. Most of us in this business are more conservative. We're fast and reliable, but we're generally a little bit more conservative on the loan to value, or LTV as we call it. And so we generally limit our LTV exposure to 70% of the purchase price or the market value in situations where you're buying an off-market property. In other words, it's not listed on the multiple listing service. So here's clearly an off-market opportunity. He's going to exercise his option to buy the property for $570,000, but if it were to go on the market today, according to an appraiser, it would sell for $900,000. So in this situation, we are actually processing an application to do 100% financing of the purchase price at $570,000. Because when you look at the relationship between $570,000 and the appraisal, you're actually below our 70% threshold.
Now, is he going to be able to afford the mortgage payments?
Well, he can, and that's one of the requirements where we need to determine that he has the ability to afford the monthly payments on our deal. So we're actually providing him a bridge loan to acquire the property, because a bank would not give him financing at 100% for this. And then he's going to pay us off afterwards. But here's the interesting rub, is that the guy called us to see if he would qualify and if we would do the loan, but he's not ready to close yet because the seller is suing him trying to get out of the contract.
Based on, because I don't want to.
Because it's appraised in value so much, he
Well,
feels
that's
like,
okay. We don't have to honor contracts anymore, do we?
you know, I took an options class one time, and the teacher said, always try to get options, but never give
Give
them.
them, exactly,
And and here's a situation where the seller is now, you know, had no idea that the market was going to recover as well as it's done in the last 4 years. And so, and here's the case where the optionee, the buyer, has a great
But
opportunity.
I'm kind of curious as to what basis, besides, I mean, just like what legal basis does the seller
He has
have?
none. The seller's going to lose. So the buyer can sue back for specific performance, but the seller's basically saying, no, I'm not going to do it. So the buyer actually has to sue him to exercise it. So
Well, so probably what it'll do is it'll say that since there's no breach of contract damages, punitive damages, it's going to, Mr. Buyer, it's going to cost you $50,000 to $100,000 to sue me to do specific performance that you can't recover. So give me, you know, $60,000 and I'll sell to you, something like that. I bet you that's going to
it'll
happen.
be interesting to see what happens. But anyway, it was a good example. In our pipeline, we've got a lot of different deals like that, but that was the deal of the week.
Well, okay, so here's another deal of the week that I had heard about from someone in your company, was that someone wanted to buy this property and fix it up and then flip it. And unfortunately, it was posted on Facebook. Like, hey, look at this great property I'm buying at a good value that I'm going to invest in and flip it in 2 months, or 3 months, whatever the figure. And the bank was surfing the web and found that and said, well, wait a minute, we didn't.
They
We're not
probably
letting
didn't find it. It's that the banks nowadays, when you do a loan application, they Google you, they check your Facebook and LinkedIn profiles, and in this case, they saw on Facebook the applicant was going to flip the property, but he represented to the bank that he was buying it for a longer term hold. And the bank wasn't interested in a fast, short-term payoff property. So,
Interesting.
yeah, so isn't that cool? So you got be careful what you say on Facebook, because even your bank now, your mortgage broker is watching.
Yeah. Now you don't care if it's a short-term loan.
No, we don't. We actually specialize in short-term loans. You can pay us. All our loans have no prepayment penalty. You can pay us back in 6 days, 6 weeks, 6 months, but
6
not
minutes?
6 years.
Okay. Yeah, not 6 years.
Yeah, most of our loans are for 12 months. We do, from time to time, make 18, 24, sometimes even 36-month loans. But 36, that would be considered a long-term loan for us. We like short-term lending. Why do we like short-term lending? Because I feel comfortable with the marketplace over the next 24 months. I'm less comfortable beyond that. I don't know when the next correction is. I don't know how severe the next correction is. And because I lend private capital, I like to be able to say to my investors, who I'm paying through my fund, the Pacific Private Money Fund right now, we're paying just a tick under 8%. A lot of them are nervous about the market. I say, you don't need to worry about the fund performance because we make short-term loans. And because we make short-term loans, and real estate doesn't move that quickly. Even when the market was going down in 2008, 9, and 10, we were making loans and getting them paid back successfully. We did not foreclose on many loans at all back then because people were, you could buy fix and flip property or make short-term bridge loans and get conventional financing within a 6 to 12 month window, and there isn't going to be a huge movement in real estate either up or down.
Well, I'd be a little nervous too if the borrower said, well, you know what, I'm going to need this loan for about 10 years because it's going to take me that long to get my credit up or something.
Yeah,
I mean, the kind of money that people are borrowing from you, generally bridge loan financing, they don't want to keep it long term.
That's exactly right. So our rates average between 9 and 10%. It kind of depends on the borrower profile, the credit score, how much they need the money for, whether there's going to be cross collateral. But for more information on bridge financing, check us out. We've got our 4th generation website just launched at pacificprivatemoney.com. Got a lot of information there. We'd be happy to share that with you, whether you're interested in, you might be a realtor or a mortgage broker and you have a client who's stuck in a transaction all of a sudden. We're famous for rescuing transactions here in the Bay Area. We're one of the only private money lenders who will do consumer home loans, owner-occupied. We do owner-occupied financing, where 9 out of 10 do not because they're not properly licensed and too lazy to go out and get their MLS. We have all our MLS. So anyway, pacificprivatemoney.com or call us at 415-883-2150.
And every once in a while, I'll run into a realtor or another banker who says, you know what, I know that company, and they have a very good reputation. So I'm proud to have you as my co-host, as I introduced you before.
Thank you. We're fast, friendly, and reliable. That's what we're known for.
FFR. Okay, here's our third trivia question. Which state has authorized the use of a firing squad as a primary means of execution? And they should do this for those hackers that Michael Snearly was talking about, in my humble opinion.
That's right.
Call 888-912-1190 to answer that question. Don't touch that dial. The Best of Investing is going to be right back. All right.
So we'll do email question, and then do we want to jump? What can we jump back, Michael? What would you prefer we talk about if we come back to you with something? Do you want to get into a conversation about insurance and the correlation between
Yeah, we can.
insurance saturation and the strength of the economy? 'Cause I'm curious about what that's all about.
Sure, sure.
This one's new for me. I usually get this thing really quickly, but and it's funny, this says not responding, so for some reason this one takes a little bit longer. It'll fix itself in a couple seconds here, but it's saving it under 3 different ways.
Yeah, that's
Yeah.
interesting.
Okay. Well, it was
But not MP3.
Um,
It's WAV files. That's weird.
yeah.
Usually that's a settings thing too. There's probably a settings where you can save
I'm
as
sure we can
Yeah.
fix it now.
Can they use?
Good question, I'm not sure.
WAV files are pretty standard, so.
I would think so, but I send it via, I send it WeTransfer, so we'll see. Always fun.
Well, they can convert it to. Let's convert it.
Yeah, I think so. All right. Okay, ready?
Yep.
Welcome back to the Best of Investing. Again, I'm Edward Brown, your host, along with Mark Hunt and our special guest, Michael Snearly. Third trivia question was, which state has authorized the use of a firing squad as a primary means of execution?
Texas,
That's what I would have thought.
Kentucky,
No.
Utah.
Yes. Very
Utah,
good.
all right.
How do you know that? Michael?
I'm pretty good at these trivia things.
Are you? Okay.
Jeopardy guy.
Yeah. All right. So, Mark, we do have an email from a listener. It says, if it appears that interest rates, it's funny, this was done, I guess, just before the interest rates did go up.
Yep.
It says, it appears that interest rates may go up with the new administration. How will that affect your fund?
Oh, it's a fun question here. I thought I was going to say how it will affect your business. So I alluded to our fund in the last segment at Pacific Private Money, where we do short-term bridge loans and other type of financing for those who can't get bank financing readily. We fund all of those loans with private capital. So we have a fund that is the source of the majority of capital that we use for our loans here at Pacific Private Money. And that fund is currently paying, last year it paid about 8.2% on a distributed annualized yield with monthly distributions of that interest income. This year it's been down a little bit. We've had a little bit of rate compression, and we've been doing more 9% loans than, say, 10% loans, and so that's brought the yield down to about 7.75 on average. But now here we've got short-term interest rates have gone up a 0.25%, a small tick in December, and they're promising more in 2017, but short-term rates and long-term rates don't typically correlate. So the long-term rates on mortgages are probably going to have already kind of factored in the pricing there. Short-term rates, as they go up, as the prime goes up, ultimately we will see rates on the private lending side, go up too, but I don't think it's going to happen for a while. To give you some perspective, 10, 15 years ago, if you went to a private money lender, or most of them were called hard money back then, pricing was generally at prime plus 5%. And when prime was, say, 7%, it wasn't unusual to see a 12% quote. When it was 8%, they were quoting 13%. That doesn't really fly today because with the prime at around 3.5, we're not a lot of guys are lending at 8.5. I mean, you can get 8.5% money, but generally it's going to be between closer to 9 and 10. And as short-term rates go up, our ability to raise our private lending rates are going to be largely, I think, driven by competition, because now what's happening is you've got hundreds of companies that have come into the marketplace that we're competing with. And so our ability to raise rates is going to be, I think, limited to what the competitors do. So I'm really not, I'm not trying to predict when our fund is going to be paying higher rates, and quite frankly, 8% is a great rate. I mean, where are you getting 8% for a fund that doesn't require a long-term commitment? We just recently reduced our lockup period from 2 years down to 1 year. So now and 1 year is actually the minimum that's required by the SEC for funds like the Pacific Private Money Fund. So we're at the minimum 1 year lockout, meaning that, you can get your money out, but we're gonna have a 3% redemption fee if you take it out sooner than 12 months. Otherwise, if you keep it in for at least a year, there's no load or no fee going in or out. So we're not asking for a long-term commitment. And the fund's fairly liquid. So when you've had it in for a year and you want out, we process redemptions fairly regularly because our loans are constantly paying off.
Well, the other thing is you pay a high rate of return without the use of leverage, and the average weighted loan to value in the fund
is 55%. So we've got
that's
a very
really
well
conservative.
secured fund right now. 55% weighted average loan to value of the fund of the loans in the portfolio. So that just means we've got some 70%, but we've got some 25%. So it's a weighted average.
Okay, so here's an honest question. Because your LTV is so low, do you actually go to bed at night hoping all the loans go bad?
So the fund would profit from loans that we would foreclose on. In fact, we did foreclose on a loan that's on the market right now, and it's probably not going to sell during the holidays, but we already pretty much know what it's going to minimally sell for, and that's going to result in a nice, tidy little profit for the fund and the fund shareholders. So the fund profits from those loans that it forecloses on, assuming that we've done our homework correctly and that there's equity in the property, sufficient equity.
So when the original loan was supposed to pay, what, 9% or 10%?
Yeah, I think it was 10% loan-ish.
And if you get to sell it for what you think you're going to sell it for, I don't know if you figured that out yet, what the rate of return would be.
It's going to likely be close to 20% annualized on that.
Whoa.
Yeah, so
That's pretty significant.
Yeah, we made the loan exactly a year ago, and so it'll be about 13 months into the loan. By the time we sell it, we're going to get all the interest, and we're going to get a nice little exit fee, as they call it in the business. So anyway, so for more information about that, again, go to pacificprivatemoney.com. Or call us at 415-883-2150. We got a lot of great material. We can shoot you via email, via PDF, and check it out. I think everybody who's a saver these days really should be looking at mortgage investing, as we like to call it here, as a means to boost the yield that you earn on your savings and retirement accounts. And funds like the Pacific Private Money Fund are great opportunities for you to put some of your IRA money in there. Again, hey, the stock market's been doing great, but and we're starting to, it's poking at 20,000. But is now the time to buy? How excited are you about it going up to 25,000?
No, but it's one of those things. Well, it's one of those things where you don't put all your eggs in that
That's
basket.
exactly
You don't put all your
right.
eggs in your basket.
Yeah.
You just kind of have a well-rounded.
Right, I'm not beating stocks. I'm just saying, it's been a good run last 6 months. But so again, if you have anxiety about that and you're looking for alternatives, you should be considering mortgage investing and give us a look at again,
No matter
pacificprivatemoney.com.
whether the stock market's going up or down, your fund is a good alternative to round out a portfolio anyway, just for diversification.
Diversification, that's what it's all about. Hey, I got another question for Michael here. One of the things, when you had sent me an email about what you do, Michael, you had said that it might be interesting to talk about how, in your opinion, how insurance is a social good and that there's a correlation between insurance saturation, to use your word, and the strength of the economy. What did you mean by that? That sounded really intriguing.
Yeah, I think often when we're talking about insurance with people, their first reaction is to think about how it affects them. They don't need insurance because it wouldn't affect me. But the truth is, we're not just buying insurance for ourselves, we're buying insurance for other people as well. So if I'm not just buying insurance for myself and driving my car, I'm buying insurance for myself and all the people who might be affected by a bad decision that I make, or might be affected by a slippery spot on the road.
Or life insurance, I'm not buying for me, I'm buying it for my heirs.
Exactly. So that's why it's a social good. And I think to tag along on a current event would be the Oakland fire, right? Here you have this tragic event that has occurred, and if there's not any insurance there, then because the person might think to themselves, well, why do I need insurance? That here we are, we're just in this warehouse, and there's no need for it. But when there's a tragedy, it's for the sake of the other people. It's not just for your sake. It's not for you to only recoup your cost. It's for you to be able to indemnify, which is a very good insurance term, to make whole, to provide some means of remuneration back to folks who suffered because of your negligence or bad decisions you've made. So that's sort of the idea of it being a social good. You're buying it for the sake of other people.
And I know that I sleep very well buying lots and lots of insurance. In fact, between the umbrella policies and all the other policies that I have, I think it's a really good idea to load up on insurance. And relatively speaking, it's not that expensive.
It's really
Just say,
not,
well,
because you're bringing in the value of the legal representation you have too.
Yeah,
So when you
exactly.
factor that in with not only the availability of this claims money, then it's a really high value investment.
All right, guys, we're going to cut to our last commercial break here, and then when we come back, we're going to wrap this thing up with our thoughts of the day and a few more tidbits, okay? Stay with us. You're listening to The Best of Investing. You know what I do like about this one compared to mine?
so I
I think it's accurate from the standpoint of the 1 minute, 2 minutes, whatever. So I don't need this as much.
yeah.
Oh,
Well, I
good.
had
Mine's
919
weird.
and you had 8, so I was kind of curious on how I ended up.
No,
at
because
919.
I started this too late, but this one was correct,
Oh,
which is
okay,
good.
got it.
I'm grading all of you guys. That's why I'm sitting here.
Okay, good.
Well, I'm going to have you do
We got
it.
5 minutes to redeem ourselves, huh? We can pull it out of the gutter.
Yeah, and straw.
It's funny, I didn't say anything on the air about, like, oh, by the way, he appears to be trustworthy because he happens to be the pastor of our church.
Yeah.
I didn't know if that was, going to be an appropriate.
That might take you down a grade.
Well, yeah, for some, some people look at it that way, unfortunately.
But yeah, we can talk about insurance saturation. So just the idea there is that in economies where there's greater insurance saturation, there's that economy is stronger. So, like in the United States, we have a very high rate of economy.
Do you want to, instead of telling us, why don't you go ahead and just, because we have 5 minutes, you can kind of finish that thought, go
Yeah.
right into that. That would
Okay.
actually that'd be good.
Yeah.
And then we'll just end it by giving our contact information, because 5 minutes goes by like that.
Yeah.
It does.
And he usually likes to have 30 seconds to
Yeah.
do his thoughts for the day, and then we got the outgoing music.
We don't do that.
Do we have to hum that?
Yeah.
Yeah.
So William
I always
Thomas
like it when
Sherman.
I hear it, and then I forget, well, that's the intro. What's the outro? The outro is
It's a little different. Yeah, it's I can't remember. I don't know. It's some music that just someone came up with.
yeah, it's nice.
It is nice. Yeah. You having fun?
Yeah, I like it. Yeah. It's always fun for me.
It's cool listening to this. First one.
So heck, I didn't realize you had plenty of public speaking experience.
Yeah,
That's
yeah,
right.
and I've done some radio shows before, so
Yeah.
But he's also taught at the seminary.
yeah, I've done a little teaching. And
Alright.
but my question for you is, and so I don't want to ask dumb questions, but is there a minimum requirement for investing?
There
Okay,
is that.
you
And
can
that's
ask that
not
on
the
the
question.
That's a
Yeah.
good idea. You can ask that on the air.
Yeah.
We just come right into that actually. Okay, you ready? This time I'm going to start this one. So make sure this is correct here. Okay. Welcome back to The Best of Investing. Last time for today, I'm Edward Brown, your host, along with Mark Hanf and our special guest, Michael Snearly. Now, Michael, you do have a question for Mark.
Yeah, Mark, I was wondering if there is a minimum investment requirement to take part in your fund.
Yeah, there is. It's $50,000 is the minimum investment. And again, we talked about a 12-month minimum investment period. And the third requirement is that you need to be an accredited investor. And the definition of being accredited is that you have a net worth of at least $1 million, not including the equity in your home, or you make $200,000 a year minimum if you're single, $300,000 if you're married. So there is a qualification. Again, it's not us; it's the government in their, in their zeal to protect consumers, make that a requirement for us. So for more information, again, go to pacificprivatemoney.com. Michael, I also want to let you finish up on your story about how insurance is kind of a public good, and that there's this relationship between insurance and the strength of an economy.
Yeah, if we were to divide up economies between first world, second world, and third world, I think you would also see a correlation between insurance saturation in those economies. So the first world economies are going to have the greatest insurance saturation among individuals and among companies. Second world or emerging economies, like maybe I would put Brazil in there,
Yeah.
you would see less insurance saturation, but certainly a fairly large rate. And then with the third world kind of economies, you're going to see the least amount of insurance saturation.
Is some of that a cultural thing? Or I understand the economics, people say, well, why would I waste money on insurance? But is there some cultures that just don't believe in it?
Sure, I mean, I think it's cultural, but really what it's tied to is a legal system. So insurance requires a stable legal system, and where there's not a stable legal system, then insurance really falters. And so, all of those factors are tied in. And going back to insurance being a social good, if you're a distributor and you have a major loss, insurance is going to allow you to get back up on your feet and to be able to provide the service you would have provided had there been no loss really as soon as possible, possibly the next day. So everybody using you as a distributor, everybody purchasing from you, maintains their business. But if you're in a culture where there is no, a strong insurance environment and that distributor suffers a loss, then everybody loses. The suppliers lose, the distributor obviously loses, and the purchasers and the retail on the back end, they also lose. So everybody loses. So this one loss here creates a domino effect of everybody losing, whereas when there's insurance saturation, the one loss really can be almost undetected because of the speed and rate at which.
See, that kind of insurance I can appreciate. It's the ones that you have to worry about getting sued from attorneys for something silly. I mean, I guess in theory, malpractice insurance is run amok for like plastic surgeons and stuff. But
Sure.
but business interruption insurance, which is
Absolutely.
what we're talking about, I can actually see that being a social good.
Absolutely, because it's for the other people. So,
Yeah.
that I think that is one reason why I feel so good about what I do on a daily basis is that I see that it really does serve a purpose within our society and culture to keep our economy moving and keep it strong.
Insurance as a public good. See, that's one way to think about it as you're writing that check.
All right. And again, Michael, how do people get a hold of you if they want to talk about either the cyber insurance or ask you questions or look at the public good of insurance?
Absolutely. Yeah, I'd be happy to talk about that anytime. The best way is to call me on my office line, which is 415-223-5549. Again, 415-223-5549.
And Mark, since you're paying such a high rate of return on your fund, there's probably some people out there listening who say, I'd like more information.
If you need money fast, or if you have money, and I hope all of you out there are saving money, and you want to put a portion of that into a high interest yielding real estate mortgage secured fund, and to get more information about how that works, call us at 415-883-2150, or just go to our website, PacificPrivateMoney.com.
Which, by the way, I actually, unbeknownst to Mark, actually pulled some preliminary title report, done property profiles, as they call it, and found out that, yes, indeed, he really does have secured deeds of trust on the properties that he does. So it's not just taking his word for it. I like that. I can sleep better at night. That and the insurance. Okay, here's our thoughts for the day. American songwriter Corky Siegel said, "Life is too important to take seriously." I like that. And American author and professor of biochemistry Isaac Asimov said, "The saddest part of life right now is that science gathers knowledge faster than society gathers wisdom." Boy, ain't that the truth.
You betcha.
All right, tune in next week to The Best of Investing. We're going to be giving away more free prizes for answering trivia questions. Thanks for listening. On behalf of our team, I'm Edward Brown. We're wishing you the best of investing. So long. And that's a wrap.
Nice.
Good job, guys.
Yeah.
So 50K plus, either you make 200,000 as a single person or 300,000 as a married person.
Yeah, so you have the net worth qualification, and then if you qualify, then the minimum investment is 50,000. We've got 105 investors, maybe 106 now. Then the average investor's in there for like $250,000. I've got a few $1 million investors, but I have quite a few people that, in fact, most people open it up with a $50,000 or $100,000, and then as they see the checks roll, and they go, and they can't help themselves. They
Yeah,
gotta
that's true.
put more in there, and so I obviously I take that that fiduciary responsibility very seriously.
Yeah.